Hey everybody, it's Tuesday night, December 15th, 2015, and I thought I would do another diary entry, if you will, tonight in advance of FOMC fireworks, which is expected for tomorrow, and follow up a little bit on the video I did a week and a half ago or so that certainly spurred quite a bit of interest, I guess, but more importantly, at this end, certainly was somewhat therapeutic for me and allowed me to kind of go back to some roots and look at some things and consider some things. And I'm really trying to get this venue back to my diary. It's how we started this 7 or 8 years ago. Most of it was written, it was typed, it was not via video. It's easier for me to do this via video. So that's what I'm going to do. I'm going to make a diary entry tonight and share with you and share with myself, document for myself some of the things that I've had to go back and reassess or reevaluate or strengthen or remind myself of some things. I do appreciate all of the feedback that I got, that really ran the whole gamut. I consider that to be a blessing in terms of many of us being in this together. And we talk about iron sharpening iron and all that good stuff. So I want to just share with you some of the things that I've thought about over the past 10 days. I think I tweeted a couple of Rocky IV photos a few days after that last video. I was not pleased. I was not pleased with my own trading. Some folks did remind me that it's not a big deal. You had a bad day, get over it, and that kind of thing. I think it is important for us, and certainly for me, to get frustrated to a point where you feel you have to do something about it. And I know I've used this analogy several times about the frog jumping into the simmering pot that doesn't really realize he's getting boiled to death. If he starts off in cool water, the temperature slowly rises versus jumping in and needing to jump out. And I think we all need that shock at times. I think we all get a little bit complacent. And if we really care about this, and if we really care about results and care about doing things right, then I think it is appropriate to basically get PO'd every now and then at your own performance. Again, a lot of helpful feedback. And had a great conversation via Skype with a good trader and now a good friend of mine over the weekend that I appreciate, Anthony, where we talked about priority, where this fits into our lives, from a spiritual perspective, and again, how does trading fit? What role does it play? That sort of thing. So, again, let me just go through a few things, a few ahas, if you will. And another individual reminded me of, I think it was Jordan Spieth. Again, not that I would compare myself to being the Jordan Spieth of trading. I don't want to go there, but he did remind me that Jordan even felt that he'd forgotten how to learn how to golf a few years ago. He just felt like all of a sudden he lost it, and before he got his act together and came back and won some majors, and that gave me hope. Again, I want to be very careful with the comparison because I don't mean to say that, but I found that analogy, I found that comparison to be fairly refreshing. And here I sit, Tuesday. It's late. It's 11:30. Just watched the Republican debate. And I realize that certainly I've not forgotten how to do this. But one thing that has come to mind is I've been on record. It's in the book. It's on many pages on this site. That the three most important things once you reach a certain point in your trading career, the three most important ingredients to being successful and profitable on a consistent basis is focus, motivation, and showing up. Focus, motivation, and showing up. Three legs of the stool over and over and over again. And I think what the last 10 days certainly, and time leading up to that, where I was going through some frustration, has revealed to me is that there's really a fourth leg that's important, and you could debate that there's 5, 6, 7 legs too, in terms of things like confidence and that sort of thing. But the fourth leg that I thought was missing at a time where I felt I had the focus, I felt I had the motivation, and I did show up, by and large, was that of execution. And if you go back, and if I go back to that video post, that is clearly where I was falling short. And I talked a lot about feeling that I was the world's best analyst, and not the world's greatest trader for a period of time. And that comes down to execution. It's great to be focused, motivated, and present, but if you do not execute, those three really are worthless. So they remain very important, but the execution piece is something that certainly deserves equal footing, if you will. So that's one aha that came to mind. It's also kind of been interesting to assess. I trade currently, not full time. I trade very seriously. I trade every day, but I do have other obligations, other business obligations that do get in the way from time to time. And so what I found is that even when there is dedicated time to be focused, motivated, and present for the market, even over extended periods of time, that there's a tendency for other thoughts, other obligations to interfere. And so that's something I think that, as I discussed with this other trader over the weekend, where we all have to decide, what's our priority in terms of what should we spend our focus on. If we are doing other things than trading, then we have to understand that is going to eat into the income, that is going to eat into the productivity, and so we have to make that conscious decision on whether we're willing to accept that when we make the decision to do more than one thing. And certainly I have a tendency, I'm kind of an all-in guy, all or nothing. So when I'm involved in 2 or 3 things, and I'm wanting to perform at my most peak performance level in each of those things, as soon as you start dividing tasks away from one, and you multiply that to 2 or 3 different tasks, then your performance is going to suffer. I mean, right? Jack of all trades, master of none. So certainly that was an ingredient that has creeped in, and one of the reasons that I'm a strong advocate in Globex trading during the right times and the right opportunities is because that does provide those of us who have conflicting obligations at times to be able to focus on the market, whether it's during the early morning Europe session, or in the case tonight when the U.S. session closed and Asia opened, which was really a gem tonight, and one of those kind of kick in the pants evenings in terms of yeah, of course, remember how to do this. And U.S. market closing right down on solid support as soon as the bell rang, and then when Asia opened at 8, about 45 minutes later, just starting to take off and resuming what had taken place most of the day. Market opening on the market profiles, volume profiles, we'll call it value area low. You can also call it 30-minute support. There are a number of different ways to describe the opening of support, but when U.S. market reopened, a great opportunity, and was able to certainly take some advantage of that. So again, there are ways to, if you want something bad enough, there are ways to structure your life, structure your trading day such that you're able to take advantage. I continue to envy those who live in Europe. Today, another great example, when Europe opened at 3, market opened on the support from yesterday's close, and then of course shot up, and those of us that had to jump in the game a little bit later because I was not up at 3 had to juggle a little bit to find the correct risk reward wholesale opportunities to get in, and so Certainly in terms of my own feeling, my own trading, um, it's back to more of a, yeah, of course I know how to do this. I'm not saying that with any ego. I'm not saying that with any bravado. It's just the fact that, of course, I know how to do this, and it's a matter of executing. And as long as that's a fourth leg, then things are fine. And certainly results have been fairly consistent. I did cut my sizes back quite a bit. I wanted to get the momentum going again, and the momentum seems to be heading in a very strong direction right now. So I think my plan at this point is after FOMC tomorrow, probably trade with fairly light size tomorrow, but after that's done and we start getting into to Friday and then next week, before the holidays are really upon us, is to get the sizes back up. So, this is a continuing evolution, and one of the reasons I like doing the diary, one of the reasons I like doing this sort of thing and talking to traders is that you never stop growing. The minute that you think that you get somewhere is the minute that the markets are going to change or something's going to happen in your life, and it's not that you've forgotten how to trade. It's just that other things have evolved a bit, and you need to continue to evolve with it. I continue um, to advocate the concept of a jellyfish, in that we have to morph. We have to morph to what the market is doing. We have to align ourselves with the market. We have to be willing to surrender our will to the market. And that's what successful trading is about. And it's not about being a spineless jellyfish, because you've got to be assertive. You've got to have the aggression at the right times. And that's the piece that, as I get ready for my 2016 plan, I want to put back on the table. Again, I backed off a little bit in recent times, but I want to put that back on the table. And I'm very excited. I said a few months ago that my passion for this has increased to a level that it really hadn't been in a while. And I think the frustration that I showed last week is reflective of the passion having returned, but struggling with just being out of step. And so I'm feeling better about that part of the game, and I'm really excited. I'm really excited, and um, the passion for this business, I love it. It's certainly a love-hate at times when you're not doing well. It's a performance-based endeavor. You're after peak performance, and you do have to ask yourself, how bad do you want it? Are you willing to get up early? Are you willing to? I mean, basically since a week ago Friday, so 10 some days, I've really not stopped thinking about this. And I know some folks said just get away. I actually went back and looked at some of Dr. Brett's great stuff, and I looked up a lot of information on the Yips. The golfers would call it the Yips. I think I had a bit of a case of the Yips that I needed to work through. The ability to, or the inability of a pitcher just to pick up a ball, hit back to him, and throw it to first base. The inability of a catcher to throw the ball to second base. Just something, a bit of a mental block. A golfer which all of a sudden can't make a 2-foot putt. Whether he's overthinking or whether he's developed a little bit of a hitch. So Brett certainly, is his words as always had some good advice and kind of got me thinking about that a little bit. But I think through all of this, I even look back. I record all my trade records in Quicken, and I have for since I ever started with this, every daily result that's in there. Going back to the periods of strong performance, and it's just a solidifying reminder that, as we've said before, past performance is not indicative of future results. And I like to flip that around. I'm saying if you're not a good trader, or if you're in a rut, in a slump, if you have a case of the Yips, just remember that you have done this before. You have proven it to yourself, and you should let each trade's result be as it ends up. Let the market decide whether you're right or not. You have probability on your side. So, nothing has changed. The methods that I continue to use with very, very little change, very, very little evolution, really, that's not the issue. But the issue for me really came back to execution. So that's my primary area of focus right now. If you go back to the scorecard that I shared a couple of months ago, I think, if you haven't seen it, go back to some of the earlier videos. It's a scorecard that's in the book. It's the one that we started in 2009. Right now, on my scorecard, you'd see a big block around that execution piece. So focus, motivation, showing up, certainly, and execution. So that's kind of where I'm at right now. Again, late on a Tuesday night. If you're looking to stay out of trouble in the morning tomorrow, or even during the FOMC swings, and you've stumbled across this, that's kind of where I'm at. So excited, and continuing to learn a little bit about this business, which is another reason I guess I love it so much, because there's always a room to improve. We tend to ebb and flow as human beings, and so this is tonight's diary entry for what it's worth. So again, Tuesday, December 15th. God bless you. Have a great trading day tomorrow, and start to share some of my tangible results with you on the other side of this little schneid. So thanks, and we'll hope the yips are over. Take care. Bye.